Hey guys, and welcome to this video. In this one, I'm going to talk to you about trading in 2023. I'm going to base it on the S&P 500 E-mini futures chart. I do loads of analysis on this, and I really enjoy doing that because these markets are very easy to understand, and it's great for traders to jump in and just get how they work. Okay, I trade the FTSE a lot, and I do various different analysis on various different assets. And the principle's all the same. We're looking to attain that market value, and we're looking to look at that bigger picture. And of course, you're going to need to know that bigger picture if you're going to be trading this in 2023. So let's talk about it just before we break up for Christmas. Just want to wish everyone a happy Christmas. Thanks to everyone who follows me a lot. I hope my videos help. And, if they do or don't, feel free to let me know. Come and join us with the link under the video. Let's jump into it. So I'm going to start off with the whole picture. I'm going to paint it for you, okay? And I do this every time because you must know why we are where we are now to judge the future, okay? Trading is all about looking to the past. It's about using data from the past because that's the only way you can judge what's likely to happen going forward. You can only do that by looking back, okay? And that happens for two reasons. Number one, it's for market sentiment, okay, and how you're going to infer what might happen in the future. And number two, it's for pretty much just looking at price points, because price points will give you an idea of where traders are getting in and out of the market, right? If you know what to look for on a chart in terms of the candles and the actual data you're looking at, using your indicators as well, you're going to make much better and much more informed decisions, okay? Trading is all about informed decisions based on the past, and that is how you're anticipating the future. You can only go off that. You can't guess, you can't gamble, okay? Gambling doesn't work. You just have to go forward with inference. So, of course, we had a long rally up all the way until we had the COVID came around, right? COVID dropped the market. We all know that. It was a massive scare. People dying to get out of investment so they don't lose their money. And then suddenly everyone piles in and you get this boom. You get everyone having lots more cash because they stayed at home. They're investing it. They're buying things. You might notice if you owned a business, you were selling more goods. I certainly sold a lot more stuff in my various businesses. But the market moves up and up and up and up. And obviously that can't last forever. Now, if you just look at the previous high we had just before the market did crash, you can see that the market actually rallies from 3,400 all the way up to 4,800 or around that area. Obviously, that's enormous, and you're beating the last high very quickly that the market is rising up. Now, if you look at every time the previous high is beaten and you get a record high on the S&P on further dates, you can see how long it takes. It creeps up. It's not a quick move. If you look, for example, at 2016 to 18, look how long that takes, okay, to move that much. It's really small blocks of candles. But if you look after COVID, the market absolutely hammers up. Now, that has to follow with the market falling down, okay, because, it can only go on so long until inflation starts. Okay, and prices start to go up, and therefore companies actually make less money, and that's why it brings all global markets down, because economies stop growing, and therefore prices won't go up in the market. Okay, so then it becomes your job to deal with that, essentially, and it becomes your job to be selling when the market is too high and buying when the market is too low. Now, looking forward in 2023, where we position ourselves on current market sentiment and price points is the following, and it comes in a little bit with what I think as well and how I'm trading it. Now, it's important to note as well, if you're looking in the future and judging where price will go, you always want to trade on facts. It doesn't matter what you think is going to happen, whether you think the market in 2023 is going to be really safe because X, Y, and Z is going to happen, the Fed's got things under control and it's all going to be fine, sunshine and rainbows. That is a thought, okay? There is more or less no factual way of proving that is the case because it hasn't happened yet, right? So therefore it becomes your job to just trade the market as it is at the moment. So there's a mixed bag of news around the globe for different economies, but what we're going to do is we're going to start off with the actual price action part of it and price levels we're looking at now. So to do that, I'm going to start on the weekly. So we discussed this downtrend. I've done that in previous videos. Have a look if you want to. We bounced just over to this point here. Now, we looked lightly long because at that time the market sentiment was bad. It was being dragged down. We didn't know how far it was going to go, so we didn't want to load in. We didn't want to be trading too large. And you caught several up moves. We then looked short again to continue that trend down. And we traded it lightly again because that new sentiment was starting to say, well, hang on, things are under control. So you can see that we're only trading it how it is at the time. But if the market massively changes its outlook or new sentiment, like it did up here, and everything was looking a bit worse, we're going to drop that size. We're going to lower our risk, and we're going to take good decisions to stop ourselves from getting blown out. Okay, so where we are at the moment, you can see there's slight price rejection. We're actually around Christmas, so it's going to be a bit slow anyway. I did recently just say, look, you can lightly short it here ever so much, and you've obviously got that move down. Now, what's happened is, because the market's indecisive and there's no massive sentiment saying, okay, this is really awful or this is really good, that is why we're trading it lightly at these areas, because there's no reason why we shouldn't. So you take it lightly long here, and obviously you're in minor gain to close that out. Now, going forward, anything up here is going to be a light short. Anything lower down, I'd be looking lightly long, because you're not seeing a clear outlook for this market. All of a sudden, it could change massively. Okay, so trading in 2023, we're doing it however the market is at the time, whatever price point we're at the time. Now, we can actually look further in the future and identify areas where we would be likely to scale in the market. So number one is here. Okay, I should think we'll get a light bounce here, and I would only trade it lightly long because we've hit it once already, and that level's going to start to degrade. Okay, some traders will disagree with that. Some traders think, okay, the more I hit it, the more likely it is. Now, it will be a reactive area. You can note that, but just remember, if you're hitting something over and over again, eventually it's going to break. Okay, so keeping the same size doesn't make sense because the probability is not the same of it happening again. It never is. Okay, so a light long would be here for the second touch. Now, if the market did go much lower and you're risk averse, I'd then look around here for a light long as well. This is what I would do. If the market goes up, and we're going to get onto market sentiment and market news in a second, but if it goes up, I'm looking lightly long here. Okay, again, for similar reasons, we've hit it already. Okay, I don't want to be a normal size. I'm going to take a slightly lighter short. If the market goes higher than that, I'm then again looking short around here because at every point I'm looking for previous price action levels. In other words, where can I infer from the past what traders are doing simply by looking at the candles? Okay, you need to train your eye to do that. You need to understand how that works because your job as a trader is to use past information to make judgments in the future, and it is to use the current market sentiment to make judgments in the future as well. Now, because we've lacked really any market impetus in the news at the moment, you're seeing very little price action and the market's going relatively sideways. Okay, you've not seen anything really different since June. It's come up and down, slowly drifting to the downside. Now, my opinion is this. I don't think we're entirely out of the woods. I think you may trickle lower, okay? But it won't matter because if the market sentiment does improve and it actually turns out the Fed's got it under control, then you would look higher, okay, for shorts. But at any point, you'd be trading lightly. So it doesn't matter which way it goes because your size is coordinated with the risk. You're going to be trading safely and you're going to take gains like that. So our price point levels I've identified already. Now, if it turned out that the news went sour, okay, things really aren't as good as people think, then this market will drag lower and I'll be in on those entries. If it turns out that the market doesn't do that and things are actually okay and it's not so bad, I'll just trade it exactly as I said the other side because I'm always going to be scaling in. I'm always going to be scaling in. So it doesn't matter what way the market news turns, that's how I can do it. Now, if in 2023 the market sentiment does turn out to be very poor, I can drop my size, I can space my trades out, so I'm in line with that risk again, okay? As I say, if the news is much better, I can do the same thing to the upside. If I think we might rally and keep going, I can get out when necessary, okay? So lots of reports currently are saying inflation will be under control by X, Y, Z. The market could drag down because we haven't quite got it yet. But in any case, if you just space your positions out, drop your size, use price action levels, you will survive that market and you'll remain solvent and you'll continue to take profit. So thanks for watching that, guys. I hope that really helps. What we'll do is we'll see how this plays out. Let me know in the comments if it does or it doesn't help, and just go ahead, get in touch, go under the link of this video, and I'll see you there. Thanks for watching, guys, and I'll see you in the next video. Have a lovely Christmas.